Hi, this is Paul from globaltradingsoftware.com, and this is a day trading tutorial on the Qs, QQQ. One thing to note is if you were to just invest in the Qs over 3 years, you'll get around about 12.7% return on your initial investment. You know, and some people would say that's a 1,270% profit in 3 years. What I'm going to show you today is a day trading strategy using the xBrat roller coaster. The xBrat roller coaster is a stochastic MACD cross with a few extra points of control. Everything's worked out behind the scenes, but what it's looking for is that roller coaster motion of the markets and allowing you to get in, get out, go long, go short, and in this case, nearly 600% profit in 1 week. And how do I work that profit out? So we are going to go through each trade, but the first thing I'm going to do is just show you a little tool that really looks at what you risk to what your reward is. Okay, so I'm going to use on the right, this is the ThinkorSwim version, so I'm using a fib extension down on this toolbar. All platforms have a fib extension tool, and the idea with this is it actually looks at extending what is really 100%. So if we click on the stop for this particular short, we click on the entry, so that's like one whole one, 100%. Okay, then we click it for the third time and we get 50%, 100%, 160, 200. They're just fib extensions, that's all. Now, so how we work this out is we have the stop, the entry, so that's one whole one, 100%. Okay, you see where the trailing stop was taken out here, that's around about 120%. So what we say is if we risk $10,000 here, that's one whole one, we would expect at this point our profit to be around about $12,000. So we've got 100%, 120% profit on this particular trade. So how I've worked out these 25%, 120, 210% and that sort of thing, I've used that simple tool. Let me just get rid of that drawing now. So let's talk through the week on QQQs and what happened, where the trades were, what the profit were, and just basically talk about what a sensible trader would do. So I'm going to start off on the Monday. There was a trade that came in on the Friday just before the close. We would not take that trade. Okay, we don't want to carry anything over a weekend. So when the markets open on the Monday, in theory that trade continued, but again it's a bit of speculation there whether we carried over the weekend. Very something I would not do. But then the roller coaster motion starts. We get a downward signal, we get a red arrow. This is our signal candle. The following 5-minute candle takes us in, comes down, gets a little bit of heat, and then we start to print our trailing stop, this little stitching here, and eventually that trailing stop was taken out, taking the profit. Okay, then we get the roller coaster comes down, we comes back up and get a green arrow. This is our signal candle at this point. It's not taken in for 5 or 6 candles here. That may be too close for some people to continue to trade into the close. At the end of the day, we break even at the close. So let's zoom in on that the next day, on the Tuesday. So we took this out at break even at a close. The following day, we open below this original entry. The order's still good. We go in, we move to this position here and take a little bit of profit. We can do that. That order is still good from yesterday, but I haven't included it in these figures. But that is an option. Roller coaster motion goes up, comes back down. We get a down arrow signal here. The following candle takes us in, we follow this all the way down, and then we take out the trading stop, 120% profit. Roller coaster comes back up, we get a green arrow, we get in. This is the closing candle, we take it out at break even. The following day, let's just move that out of the way. We are in and out, but the main thing is the order's still good. Okay, we get these first two down candles, we come back up. For me personally, wait for the first 15 minutes to be over, first three candles, then we get a move up through that original entry. That's where our stop is. We still take the trade. Trading stop starts to get printed at this point, 210% profit. The order is still good from yesterday. That entry, that start point is still good from the previous day because it's not broken the stop. Once we get through, get rid of that first 15 minutes, get that volatility out of the way, and then it just moves out. Really great trade. On the Thursday, we get big data. We get a massive move down here. So this is a big risk, but remember, we're only risking the same amount each time. So we're risking $10,000 here, we're risking $10,000 on this one. So if this comes back against us, it takes us out at $10,000, okay? $10,000 loss. We risk $10,000 here. Obviously, there's more contracts involved when you've got a smaller entry to stop. This was a $21,000 profit. If this would have gone against us, we take the $10,000 loss. In reality, it didn't. The momentum continued, came back, 30% profit. Okay, so $3,000 profit there, risking $10,000. We move through, and then we go to the Thursday. We get an entry signal here. We go long into the close, take 30% profit because we're closing it out before the markets close. On the Friday, simple, we get the roller coaster motion come back down, and we get the down arrow, we get the stop, we get the entry, the trading stop gets taken in, and then this is where the close is, all the way down here. That's 160% profit. We would not carry over on a Friday. So that's a whole week. Really, really simple, nearly 600% profit on the week. Compared, that's almost half that you can get in 3 years if you just let it ride. Day trading can be a lot more lucrative. Again, there's different options, a way to do that. You can use options. For example, you could just trade. You can go long and short with those Qs, depending on where your risk is going to be. So risking $1,000 on this particular trade, you would have won $2,100. Risking $1,000 on this trade, you would have won $300. You would have won another $300 coming into there, $600 day. It's about where, if it comes against you, what your risk would be. So then, again, I'm not going to teach you how to do options trading. I'm just looking at the signals from the software and what that risk would be. So if you was an options trader, if it came back against you and come to this price, you would close out and lose $1,000 if you wanted to risk $1,000. So how you then put that strategy together, entirely up to you. There's sophisticated traders out there that will use options. There are sophisticated traders in Europe that would use CFDs for this, for example. I'm not going to teach you how to trade each different type of way of doing this. I'm just looking at Qs. This is the entry, this is a stop. If you wanted to risk $1,000, and you would risk the same amount each day, regardless of where the stop and entry is. Okay, so this is a nice narrow one here. This is a nice narrow one. This is a big wide stop and entry, but you would still risk the same amount each time to generate that continual profit. If we go and look at the following week, we get a winner here. We get a loser. So on this day, we're 50% win rate. The following day, we get a winner and we get a break even. The following day doesn't take us in. And then on the Thursday, we get taken in, break even. The following day comes all the way down. So that week was a pretty, that week was probably around about, 100, 200%. So you're not always, I'm not trying to make videos to say, you're always going to make 500% profit. you know, in the following week, it was only 100%, unless you carried it over. The week after, we got a winner here, slight winner. We got a winner, winner, winner. Okay, so the following week was probably around, that's about 120, that's about 120, 240, 250. That trade didn't get taken in. That was a loser. Take away 100, 150%. Okay, and that's how it goes. Sometimes it's in the groove. So in a month, you would look for a week that's really in the groove. The rest of the month, it won't be in the groove, and you, instead of making 575% profit, you may only make 150, 200%. But over a month, that is a hell of a lot more than just buying QQQ and leaving it for 3 years. So day trading QQQ can be very, very profitable. You just need a simple and repeatable strategy, and this is where the xBrat roller coaster comes in, because it's simple. It does all the hard work behind you, gives you an entry, gives you a stop, tells you when to take it out. Okay, you just need to work out your risk, what you want to risk for each trade, and I would advise that you risk the same amount for each trade, same amount of money, and you will get a good, consistent, profitable day trading strategy on the Qs. I'm going to put the link down below for the roller coaster for the ThinkorSwim version, and then the link below that will be for other platforms like TradingView, Motiveway, NinjaTrader, TradeStation. So there's lots of different platforms we develop this for, but it's a very, very simple strategy for day trading Qs.